you know what critical illness insurance is and why it's important? Let's start by unraveling this seemingly complex term. Critical illness insurance is a special kind of insurance designed specifically to cover certain serious illnesses that are explicitly listed within a policy. This could include conditions like cancer, stroke, or heart disease, to name a few. When faced with such a daunting diagnosis, the last thing you want to worry about is the financial burden that comes with it. That's where critical illness insurance comes in. If you're diagnosed with one of the conditions covered under your policy, you'll receive a lump sum payout. This can help cover a variety of costs, from medical bills to living expenses, giving you one less thing to stress about during a challenging time. Now that you have a basic understanding of what critical illness insurance is, let's dive deeper into why it's important. Why should you consider getting critical illness insurance? Now, we all know that life is full of surprises and not all of them are good. Imagine being hit with a serious illness. The emotional toll is heavy, but there's another aspect that can make it even more challenging: the financial burden. Medical bills can stack up quickly, and lost income can add to that stress. This is where critical illness insurance comes into play. This insurance is made to alleviate that financial stress, allowing you to focus on your healing. It provides a lump sum payment if you have a specified illness, such as cancer, heart attack, or stroke. This payout can be used to cover medical costs, everyday expenses, or even a much-needed vacation once you're back on your feet. So while we hope you'll never need it, having critical illness insurance can be a financial lifesaver. Remember, being prepared can make a world of difference when dealing with a serious illness. Are you finding this information helpful? We're thrilled to bring you more videos that unravel the complexities of subjects like critical illness insurance. When you hit that like button, it's a vote of confidence for us. It tells us you're enjoying the content and you want more. Sharing the video helps others discover these insights too. And by subscribing, you become part of our informed community, always in the loop with our latest content. So don't forget to hit that like button and subscribe to our channel for more information like this. So how do you choose a critical illness insurance policy? It's not as hard as it sounds if you break it down into a few key factors. Now let's get started. First, consider the illnesses covered by the policy. Different policies cover different illnesses, and it's crucial to choose one that covers the most common ones, such as heart disease, stroke, and cancer. But don't stop there. Make sure to consider your family history and personal risk factors as well. Next, think about the payout amount. This is the money you'll receive if you're diagnosed with a critical illness. It should be enough to cover your medical bills, loss of income, and other expenses. This will vary based on your lifestyle and financial obligations. So give it some thought. Then there's the premium costs. That's the amount you'll pay for the insurance. This is a balancing act between affordability and coverage. Remember, the cheapest policy isn't always the best. It's worth paying a little more for a policy that provides this comprehensive coverage. Lastly, consider the reputation of the insurance provider. Look at their customer reviews and ratings, their claim settlement ratio, and their financial stability. These factors can give you a good idea of the kind of service you can expect. Choosing the right critical illness insurance policy is a decision that should be made with care. The right policy can provide peace of mind, knowing you're financially protected if a critical illness strikes. Let's recap what we've discussed today. Critical illness insurance provides financial support during a major illness. It's important to be prepared. Remember, critical illness insurance can provide you with financial support at the time you need it most. Ever wondered why the rich keep getting richer even after they're gone? It's not just about making money, it's also about knowing how to protect it. One crucial piece of this puzzle is life insurance. While many view it as an unnecessary expense, the wealthy see it as a fundamental tool for wealth protection and growth. There's a significant knowledge gap here, with a rich understanding its value and the broke dismissing it. So what is it that the rich know about life insurance that the broke don't? Let's dive in and find out. It is not just about having money, it's about knowing how to use it. When it comes to how life insurance can work for them, the rich and the broke have fundamentally different approaches to this subject. Now, let's dive in. The wealthy view life insurance as an investment vehicle, a strategic part of their financial portfolio. They see it as an instrument to protect their wealth and ensure a legacy for their heirs. They understand that life insurance isn't merely about covering the costs of unfortunate events, but also about growing their assets and securing their financial future. On the flip side, those struggling financially often see life insurance as an expense they can't afford. They view life insurance as a luxury item, something they'll look into when they have more money. This perspective can hinder their financial growth. They miss out on the potential benefits that life insurance can offer them, like a safety net, a tax-free inheritance, or even a retirement income supplement. Here's the key point. Life insurance should be seen as a financial tool, not just a cost. It's about safeguarding your loved one's future, but it's also about building them wealth. For instance, certain types of life insurance policies can build cash value over time that you can borrow against tax-free. This can be a vital resource, especially during tough financial times. Some might argue, but the premiums are expensive. And yes, they can be. But it's all about perspective. Would you rather invest a little today to protect and grow your family's wealth, or risk leaving your family financially vulnerable in the future? This shift in how one thinks about life insurance, from an expense to an investment, can make a world of difference. Here is where the rich and the broke part ways. The rich understand the value of life insurance as an investment. They see it not as a burden, but as a tool for financial stability and growth. They know that the cost of life insurance is far outweighed by the potential benefits it will provide. Understanding life insurance as an investment rather than an expense is a game changer. It's one of the key things the rich understand that the broke do not. So what is it inside? What is it that the rich know about life insurance that the broke do not? They understand its value beyond the death benefit. Now let's dive into the specifics. The first thing the wealthy grasp is the cash value that life insurance can offer. It's not just a payout when you pass away. Instead, It's a growing pool of money that can be accessed during your lifetime. This cash value can be used for emergencies, retirement, or even investment opportunities. Next, we have estate planning. The rich often use life insurance as a strategic tool in their estate plans. It can provide liquidity to pay estate taxes and ensure a smooth transition of wealth to the next generation. Then there are the tax benefits. The payouts from a life insurance policy are typically tax-free. Plus, the cash value inside a policy grows tax-deferred. That means the rich can compound their wealth faster without the drag of taxes. Lastly, life insurance is a means of asset protection. In many jurisdictions, life insurance proceeds are protected from creditors. This provides an additional layer of security for the wealthy, safeguarding their assets for their loved ones. In short, the rich view life insurance not just as a death benefit, but as a necessary financial tool. It offers cash value, estate planning benefits, tax advantages, and asset protection. Life insurance is more than just a safety net. It's a financial tool that, when used correctly, can help protect and grow wealth. That's what the rich understand. Knowledge is power, and understanding life insurance can make a big difference in your financial future. It's all about taking control and making informed decisions. Life insurance isn't just for the wealthy. It's for anyone who wants to secure their future and the future of those they care about. You see, the rich know that life insurance isn't an expense, but an investment, a vital part of their wealth-building strategy. And you too can now harness this tool. It's all about education. So why not make a commitment to learn more? You'll be surprised at what you can achieve when you take the reins. So are you ready to take the next step to bridge the knowledge gap and join the ranks of those who understand the true value of life insurance? Please like and subscribe to this channel for more information like this. Remember, the more you know, the more you grow. Until next time, keep growing your wealth. Have you ever wondered, what is the gig economy and how does it affect me? You're not alone if you have. The phrase gig economy is a new term that is changing how we think about work. It means a job market where people take on short-term jobs or freelance work instead of having one long-term job. This is why it's called the gig economy. It's like doing different gigs tasks. This type of work can be great. It lets people be their own boss, work on things they love, and balance their work and personal life in a way that fits them. But it's not always easy. The gig economy can also be tough because it doesn't provide the same job security or benefits that a regular job does. Now that we know what the gig economy is, we can talk about how it connects with life insurance. So what is life insurance? And why would a person working gigs need it? Life insurance is like a promise between you and an insurance company. You pay them regular payments called premiums, and they agree to give money to the people you choose, your beneficiaries, when you pass away. Sounds easy, right? But people often don't realize how important this is. Life insurance isn't just a safety net. It's a tool that helps make sure your loved ones will be okay financially. For people working gigs, who often don't get the same benefits as other workers, life insurance is super important. It makes sure your family won't have to worry about money, even if you're not around. There are many kinds of life insurance, like term insurance, whole life insurance, and universal life insurance, each with its own benefits to fit your needs. Getting why life insurance is important, especially for gig workers, can be a big deal. Let's see why. What happens when the world of flexible jobs, such as freelancing, meets the need for life insurance? These days, more and more people are choosing jobs that let them pick their own schedule and work from anywhere they want. But this freedom also comes with its problems, and one of those problems is getting life insurance. Life insurance is like a safety net made of money that makes sure your family's taken care of if something bad happens to you. It's a very important part of planning for your future, but a lot of people forget about it. So, why is it extra important for people who work flexible jobs? Well, these people are their own bosses. They don't have a company that gives them life insurance as a benefit. This means they have to get life insurance for themselves. Sometimes not having a regular salary can make this hard, but it can be done. Life insurance companies see that more people are working flexible jobs, and they're changing their rules to fit these people. They're making their policies more adjustable for people who might have changing incomes. For example, some companies let you change how much you pay based on how much money you're making. But people who work flexible jobs might have a harder time getting life insurance because their income changes a lot. They might have to pay more, and not having a stable job could make insurance companies see them as risky. It's key for these workers to look at different options and find a plan that fits their needs. Even with these possible problems, life insurance isn't a luxury, but a necessity for people who work flexible jobs. It makes sure their families are financially stable if something unexpected happens. It's worth it for the peace of mind. As we can see, life insurance is a very important part of planning for your future, especially for those in the flexible job market. So we've just talked about how life insurance and the gig economy work together and what you should do next. We've discussed how the gig economy affects us daily. We've also highlighted the need for life insurance, which can often be overlooked. Now, we've reached a point where you'll need to think about your own situation. Are you working in the gig economy? Do you have life insurance? If not, it's time to look at what's available to you. Keep in mind that life insurance isn't just there for emergencies. It's there to help you when you need it most. And with the ups and downs of the gig economy, it could be what keeps you afloat. Don't leave your future to chance. Learn as much as you can and make a smart choice about your life insurance needs. Make sure you're ready for whatever the gig economy brings. Check out your life insurance options now, and remember to like, share, and subscribe for more videos like this one. Have you ever wondered how your loved ones would cope financially after you're gone? It's a sobering thought, isn't it? One that many of us try to avoid. But the truth is, it's an intersection we all arrive at, the meeting point of life and death. Now imagine if you could leave behind not just memories, but also a safety net for those you care about. This is where the concept of estate planning coupled with life insurance comes into play. Estate planning is all about making sure your assets are distributed as per your wishes after your departure. And life insurance, it's a powerful tool that can provide financial security for your loved ones when they might need it the most. Together, they form a comprehensive strategy to safeguard your family's financial future. Understanding the connection between estate planning and life insurance can make a huge difference in the lives of your loved ones. But what exactly is estate planning, and why is it so important? Let's simplify this. Estate planning is essentially a blueprint of how you'd like your assets to be distributed after you're gone. It's like leaving behind a roadmap for your loved ones, guiding them to your final wishes. You see, without an estate plan, the distribution of your assets becomes a game of chance, dictated by laws that may not align with your intentions. This uncertainty can lead to disputes among family members, which can be emotionally taxing and financially draining. Furthermore, without a plan, your assets might end up in the hands of unintended recipients, a distant relative you barely know perhaps, or even the government. Estate planning, then, is not just about managing wealth. It's about clarity, peace of mind, and most importantly, ensuring that your wishes are honored and your loved ones are taken care of. So, estate planning is not just about wealth. It's about ensuring your wishes are fulfilled. Now let's delve into how life insurance can be a powerful tool in estate planning. Life insurance is a versatile instrument that can serve multiple purposes in your estate plan. One of its primary benefits is that it can help cover estate taxes. These are taxes imposed on the value of your estate after you pass away. Without proper planning, these taxes can be a significant burden on your heirs, potentially forcing them to sell off assets. But with a life insurance policy, the death benefit can be used to pay off these estate taxes, allowing your loved ones to keep their inheritance intact. But it's not just about estate taxes. Life insurance can also provide immediate cash for your surviving family members. When someone passes away, there are often immediate expenses that need to be covered, such as funeral costs, unpaid medical bills, or even just day-to-day living expenses. A life insurance policy can deliver a lump sum of cash right when it's needed most, ensuring that your family doesn't have to scramble to cover these costs. There are different types of life insurance policies that you can use in your estate planning, each with its own set of benefits. Term life insurance, for instance, is an affordable option that provides coverage for a specific period of time. Whole life insurance, on the other hand, offers lifelong coverage and builds cash value over time, which can be borrowed against or even used to supplement your retirement income. Finally, let's consider some scenarios where life insurance can be beneficial in estate planning. If you have a large estate, life insurance can help cover the estate taxes and protect your assets. If you have a young family, life insurance can provide necessary financial support in the event of your untimely death. Or if you're a business owner, a life insurance policy can provide funds to keep your business running smoothly during the transition period after your passing. So, life insurance can be a key player in your estate planning strategy, providing peace of mind and financial security for your loved ones. Let's rewind and condense what we've learned today. We've navigated the complex intersection of life and death and unraveled the simplicity that lies beneath estate planning. We've discovered how life insurance can serve as a powerful tool in this process, adding a layer of financial security and peace of mind. Remember, estate planning is not just about distributing your assets. It's about ensuring your loved ones are cared for after you're gone. It's about leaving a legacy that extends beyond your lifetime. And life insurance, well, it's the golden key that unlocks this potential. It provides a tax-free lump sum that can help cover funeral costs, pay off debts, and even contribute to your loved one's future financial goals. So, let's not underestimate the power of planning ahead. Let's not overlook the value of life insurance in estate planning. Remember, estate planning is a gift to your loved ones, and life insurance can make that gift even more valuable. Please like and subscribe to this channel for more information like this. Have you ever wondered how underwriting works in life insurance? It might sound complex, but don't fret. Let's break it down. Underwriting is a crucial process that insurance companies use to assess the risk involved in offering insurance to a potential policyholder. Think of underwriters as detectives, delving into your lifestyle, health, and even your hobbies. Their job is to analyze the likelihood of an insurance claim being made. Now that you know what underwriting is, let's delve into how it works. The underwriting process in life insurance begins when an application is submitted. This is the point where the underwriter steps in like a detective to examine the application thoroughly. They are the ones who determine the risk that the insurance company is taking by insuring the applicant. The underwriter's job is to look at various factors that could affect an individual's life expectancy. This includes things like age, health, occupation, and lifestyle. Each of these factors plays a significant role in determining the risk level associated with insuring the individual. Let's consider age first. It's no secret that as we age, our health risks increase. Therefore, the older the applicant, the higher the risk for the insurance company. This is why premiums tend to be higher for older individuals. Next, the underwriter looks at the applicant's health. They review medical records and sometimes require a medical examination. A person with a clean bill of health is less risky to insure compared to someone with a chronic illness or poor health history. Therefore, a healthier person will likely have a lower premium. Then there's the occupation. Some jobs are inherently riskier than others. For example, a firefighter or a construction worker faces more daily risks compared to an office worker. So, the nature of your job can impact the cost of your premium. Lastly, the underwriter considers lifestyle habits. Regular exercise, a balanced diet, and no history of smoking or excessive drinking. These can all contribute to a lower premium. On the other hand, risky behaviors like smoking, heavy drinking, or dangerous hobbies increase the risk and therefore the premium. Once the underwriter has gathered and analyzed all this information, they make a decision. They might accept the application as it is, suggesting a standard premium. Or they might adjust the premium amount based on the calculated risk. In some cases, if the risk is deemed too high, they might decline the application altogether. The underwriter's analysis results in a decision to accept, adjust, or decline the application. And that's how the underwriting process works in life insurance. The underwriting decision is crucial in life insurance. Picture this. It's the moment of truth, the grand finale after an intricate dance of information gathering and assessment. There are three potential outcomes. First, acceptance. This is when the underwriter decides that the applicant poses a manageable risk and approves the policy at the proposed rate. Then there's adjustment. In some cases, the underwriter may conclude that the risk is higher than initially assessed. So they adjust the policy terms, often increasing the premium or limiting the coverage. Finally, denial. This is the least desirable outcome, where the underwriter deems the risk too high for the company to take on. In each of these scenarios, the underwriter's decision is driven by one core principle: to manage the risk the applicant poses to the insurance company. They're the gatekeepers, the risk assessors, the decision makers. Thus, the underwriter plays a pivotal role in ensuring the financial health of the insurance company. The underwriting process significantly impacts both the insurance company and the policyholder. It's like a silent guardian that keeps the insurance company financially sound. How so? By meticulously assessing risk. It's all about balance. Too much risk might lead to financial instability for the insurance company, while too little risk may mean missed opportunities for growth. Now let's flip the coin and look at the policyholder's side. The underwriting process also determines the premium amount that they'll have to pay. It's a fine line to walk, really. If the risk associated with a policyholder is deemed high, the premium will be higher as well. Conversely, a lower risk profile leads to a more affordable premium. So both parties, the insurance company and the policyholder, are affected by the underwriting process. It's a dance of numbers and probabilities, a complex game of balance and risk. The underwriting process, therefore, is a vital component of life insurance. So, there you have it, a glimpse into how underwriting works in life insurance. To summarize, underwriting is a vital risk assessment process. It determines whether an insurance company will issue a policy to an applicant, and if so, at what premium amount. It's a fascinating balancing act, balancing the insurer's risk against the needs of the applicant. It's the cornerstone of how life insurance companies operate. So keep exploring, keep asking questions, and keep learning. Please like and subscribe to this channel for more information like this.
Have you ever wondered about your financial future? How secure is it really? In the grand scheme of life, financial security is often a cornerstone of our peace of mind. It's about more than just having money in the bank. It's about knowing that no matter what life throws at you, you have a safety net in place. Financial security isn't a destination, it's a journey of careful planning and strategic decision-making. One of the most effective tools in our financial planning toolkit is life insurance. It's a promise. A pact that ensures the financial well-being of your loved ones when you're no longer around. But what if life insurance could do more? What if it could not only provide a death benefit, but also offer a living benefit, a potential for growth, and a cushion against market downturns? That's where indexed universal life insurance comes into play, a unique product designed to secure your financial future. So, what exactly is indexed universal life insurance? Well, think of it as a fusion of life insurance and investment. It's a unique type of permanent life insurance policy that not only ensures that your loved ones are financially secure after your demise, but also allows your money to grow over time. Yes, you heard that right. It's like having your cake and eating it too. At the heart of Indexed Universal Life Insurance, or IUL, is a cash value component, a sort of personal savings account within your policy. Each time you pay your premium, a portion of it goes towards this cash value. Over time, as you continue to pay your premiums, this cash value can grow, creating a pool of funds that you can tap into during your lifetime. But here's where it gets interesting. The growth of this cash value is linked to a stock market index. Now, you might be thinking, isn't the stock market risky? Well, yes, it can be. But with an IUL, your cash value isn't directly invested in the stock market. Instead, the insurance company uses the index as a benchmark to calculate the interest credited to your cash value. Now, this doesn't mean that you'll make a killing when the stock market soars. There's usually a cap on the maximum interest rate. But on the flip side, if the market takes a nosedive, your cash value won't decrease. That's right. There's a floor that protects your cash value from market loss. You get to participate in the market's upside potential while having a safety net to fall back on. And let's not forget the most fundamental aspect of any life insurance policy, the death benefit. This is the lump sum payout your beneficiaries will receive when you pass away. With an IUL, you're not just securing a financial safety net for your loved ones, you're also creating an avenue for potential growth and financial flexibility during your lifetime. In essence, Indexed Universal Life Insurance combines the death benefit of traditional life insurance with the growth potential of an investment. Before we dive deeper into Indexed Universal Life Insurance, we have a small request. If you're finding this video informative and helpful, please hit the like button below. And don't forget to subscribe to our channel for more insightful content like this. By subscribing, you're not just supporting us, but you're also staying ahead with vital financial information that can help secure your future. We regularly publish videos on a range of topics related to personal finance, insurance, and investment strategies. So whether you're an experienced investor or just starting on your financial journey, our content is designed to provide you with the knowledge and insights you need to make informed decisions. Remember, knowledge is power, and in the world of finance, it's your key to unlocking a secure and prosperous future. So, go ahead, hit like, subscribe, and join us on this journey to financial empowerment. Now, let's get back to exploring the features of Indexed Universal Life Insurance. Now let's delve deeper into the features of Indexed Universal Life Insurance. One of the most appealing aspects of Indexed Universal Life Insurance, or IUL for short, is its flexible premiums. This means you, as the policyholder, have the freedom to adjust your premium payments within certain limits. You can increase or decrease your premium amount based on your current financial situation. This flexibility allows you to manage your policy effectively, taking into account your financial capabilities and life changes. Another significant feature of IUL is the death benefit. This is the amount of money your beneficiaries will receive upon your death. With IUL, you have two options for your death benefit. It can either be a fixed amount, or it can increase over time based on the cash value of your policy. This way, you can ensure that your loved ones are financially secure even after you're gone. Now let's talk about cash value accumulation. This is where things get interesting. The cash value of your policy grows over time, tax deferred. This means you don't pay taxes on the growth of your cash value as long as the money remains in the policy. Moreover, the growth of the cash value is linked to a stock market index like the S&P 500. However, it's important to note that your cash value doesn't directly participate in the stock market. Rather, it participates in the performance of a chosen index. So, if the index performs well, the cash value of your policy increases. And if the index performs poorly, your cash value won't decrease thanks to a feature known as the floor. The floor is typically 0%, meaning your cash value won't drop even if the market does. This brings us to the last feature we'll discuss today: participation in a stock market index. With IUL, you can potentially earn more interest on your cash value as it's linked to the performance of a stock market index. But don't worry, your cash value is not directly invested in the stock market, so it's not subject to the same risks. Your cash value can grow based on the positive returns of the index, but it's protected from negative returns due to the floor rate. This means you have the potential for growth without the risk of loss. These features of Indexed Universal Life Insurance make it a powerful financial tool. The flexibility of premiums, the potential for cash value growth, the security of a death benefit, and the opportunity to participate in the performance of a stock market index all work together to provide a multifaceted approach to financial planning. These unique features make indexed universal life insurance a versatile tool in securing your financial future. So, why should you consider indexed universal life insurance? Well, we're about to delve into the reasons that make this type of life insurance stand out from the crowd. First and foremost, indexed universal life insurance, or IUL, has the potential for higher returns compared to other life insurance products. While traditional life insurance policies typically offer a fixed interest rate, IULs are tied to a stock market index. This means your cash value has the opportunity to grow more substantially when the market performs well. It's like having a life insurance policy with a side of investment potential. But don't worry, IULs come with a safety net. Even if the market takes a downturn, your policy's cash value won't decrease. You see, IULs have a guaranteed minimum interest rate, ensuring your cash value won't dip below a certain level. It's a win-win situation. You get the potential for growth without the risk of loss. Next, let's talk about the tax advantages. The death benefit from an indexed universal life insurance is typically tax-free. This means your beneficiaries won't have to worry about Uncle Sam dipping into their inheritance. Plus, the cash value within your policy grows tax-deferred, allowing it to potentially accumulate more rapidly. Now, on to flexibility. With an IUL, you have more control over your premium payments and death benefit. You can adjust your premium payments within certain limits, which can be a lifesaver during financial hardships. And if your needs change over time, you can also adjust your death benefit. This level of flexibility is hard to find in other life insurance products. Finally, IULs can also provide a source of tax-free income during retirement. You can take out loans against your policy's cash value, providing a financial cushion during your golden years. With indexed universal life insurance, you get more than just a life insurance policy. You get a financial planning tool. It's about protecting your loved ones, growing your wealth, and planning for a comfortable future. So isn't it worth considering? To recap, indexed universal life insurance is a unique type of life insurance that offers financial security in multiple ways. It's a dynamic financial tool that's been gaining popularity for its versatility and potential for growth. At its core, indexed universal life insurance is a permanent life insurance policy. This means it's designed to last your entire lifetime and won't expire after a certain period, provided you keep up with premium payments. So, you can rest assured, knowing that your loved ones will be financially secure no matter what. But that's just the tip of the iceberg. What truly sets indexed universal life insurance apart is its cash value component. This cash value is tied to a specific market index, allowing your money to grow with the ups and downs of the market, while also offering protection from market downturns. It's a beautiful blend of security and growth potential. Plus, there's the flexibility. With indexed universal life insurance, you get to adjust your premium payments and death benefit to fit your changing needs and circumstances. Life is unpredictable, and this type of insurance understands and adapts to that. And let's not forget about the tax advantages. The cash value of your indexed universal life insurance grows tax-deferred. This means you won't have to pay taxes on any earnings until you withdraw the funds. And if you play your cards right, you might not have to pay taxes at all. Indexed universal life insurance is not a one-size-fits-all solution, and it might not be for everyone. But for those who value flexibility, growth potential, and long-term security, it's definitely worth considering. Remember, the key to making the most of indexed universal life insurance is understanding how it works and aligning it with your personal goals and circumstances. It's always a good idea to consult with a financial advisor or insurance professional to help guide your decisions. With its unique features and potential benefits, indexed universal life insurance could be the key to securing your financial future.
Ever wondered why life insurance is often seen as a necessary evil? It's time to dispel the fog of misconceptions surrounding it. Many perceive life insurance as an ominous reminder of life's unpredictability, a gloomy pact with the inevitable. But let's flip the script here, shall we? Life insurance isn't about dwelling on the end. It's about cherishing and safeguarding the journey. It's about providing financial security to your loved ones, ensuring they are cushioned against the financial impact of unforeseen circumstances. It's about peace of mind, knowing that come what may, you've got a safety net in place. Think of it as a hero in disguise, quietly working in the background, ready to step in when needed. It's not about the end game, but about the legacy you leave, the lives you touch, and the comfort you provide. So, life insurance isn't just a necessary evil. It's a smart move for anyone wanting to secure their future. But did you know, beyond the surface, life insurance has some hidden benefits that many are unaware of? That's right, it's not just a safety net for life's uncertainties, but also a savvy investment tool. One of the most striking benefits of life insurance is that it can function as a tax-free wealth-building opportunity. You might be wondering, how is that possible? Well, it's quite simple. The payout from a life insurance policy, unlike other forms of income, isn't subject to taxes. This means that your beneficiaries can receive the full amount, allowing them to build wealth for their future. Furthermore, some life insurance policies even offer cash value accumulation over time. This is money that you can access during your lifetime, providing an additional layer of financial security. So, life insurance isn't just about covering life's uncertainties. It's also a clever way to build wealth. A well thought out life insurance policy can serve as a powerful tool in your financial strategy. Now, the big question remains, how does one decide whether to get life insurance or not? Well, it's not a one-size-fits-all answer. It's about carefully considering your unique circumstances and future aspirations. Start by assessing your financial situation. Do you have outstanding loans or debts? Life insurance can ensure these are taken care of, even in your absence. Next, ponder over your dependents. If you're the primary breadwinner, your family might face financial hardship without your income. In such cases, life insurance can be a safety net, providing them with financial security. And don't forget to think about your future goals. Are you planning to send your kids to college? Or perhaps you dream of a retirement free from financial worries. A life insurance policy can help fund these aspirations. So, take a moment, reflect on your life, your responsibilities, and your dreams. Bearing all these factors in mind will help you make an informed decision. Remember, the decision to get life insurance should be based on your personal circumstances and future aspirations. So, let's quickly recap what we've learned about life insurance today. Life insurance, often cloaked in mystery, is more than just a safety net. It offers unique benefits that extend beyond the common perception of risk coverage. It provides peace of mind, knowing that your loved ones will be financially secure even when you're not around. But it's not just about protection. Life insurance is also a tax-free wealth-building opportunity. It's a financial tool that can help you accumulate wealth over time without the tax burdens that typically come with other investment vehicles. The decision to get life insurance is a significant one. It requires careful consideration and understanding of your financial goals and responsibilities. Don't forget to share this video with your friends, like it if you found it useful, and subscribe to our channel for more insightful content. Remember, Life insurance isn't just a safeguard, it's a stepping stone to a secure future. Life can be a whirlwind of emotions, but at its core, we all yearn for one thing: happiness. It's that warm feeling of joy and contentment that makes life feel a little brighter. We often search for happiness in big milestones, but what if I told you it's often the simplest things that bring the most joy? It's about finding those little sparks of happiness in everyday moments. Whether it's a shared laugh with a loved one, the warmth of the sun on your skin, or the feeling of accomplishment after a productive day, happiness is within reach. Think of happiness as a muscle. The more you use it, the stronger it gets. When we actively cultivate happiness, we open ourselves up to a world of possibilities. It's like putting on a pair of rose-colored glasses. Suddenly, challenges seem less daunting and opportunities appear brighter. Happiness isn't about ignoring life's difficulties. It's about approaching them with a positive outlook. When we feel happy, we're more likely to connect with others, embrace new experiences, and approach life with a sense of optimism. This positive energy can be contagious, spreading to those around us and creating a ripple effect of joy. So if you're looking for a little more happiness in your life, remember that it's often the simplest things that make the biggest difference. Embrace the little moments, cultivate positivity, and watch as your world transforms. Why is happiness so important? It's not just about feeling good, it's about unlocking your full potential. When we're happy, our brains literally work better. We become more creative, better at solving problems, and more resilient in the face of stress. This is what I call the happiness advantage. Imagine your brain as a muscle. When you're stressed or unhappy, it's like trying to run a race with a weight tied to your ankle. But when you're happy, it's like that weight has been lifted, allowing you to run faster and farther than you ever thought possible. Happiness gives us the mental edge we need to succeed in all areas of life. Studies have shown that happy people are more successful in their careers, have stronger relationships, and even live longer, healthier lives. They're also more likely to give back to their communities and make a positive impact on the world. Happiness is not just a personal benefit, it's a gift that keeps on giving. Ready to unlock your happiness advantage? The good news is, it doesn't require a complete life overhaul. Small, consistent changes can make a big difference. Try incorporating these simple steps into your daily routine. 1. Start a gratitude journal. Each day, write down 3 things you're grateful for. They can be big or small. The key is to focus on the positive aspects of your life. 2. Practice random acts of kindness. Doing something nice for someone else, no matter how small, can boost your own happiness levels. Pay for someone's coffee, offer a compliment, or simply lend a listening ear. 3. Cultivate social connections. Make time for the people who matter most. Connect with loved ones. Join a club or group, or simply strike up a conversation with a stranger. 4. Prioritize physical activity. Exercise releases endorphins, which have mood-boosting effects. Find an activity you enjoy and aim for at least 30 minutes most days of the week. 5. Get enough sleep. When we're well rested, we're better equipped to handle stress and maintain a positive outlook. Aim for 7 to 8 hours of quality sleep each night. Please like and subscribe to this channel for more information like this. Remember that happiness is a journey, not a destination. There will be ups and downs along the way, but the key is to keep practicing these positive habits. Over time, they'll become second nature, and you'll find yourself naturally gravitating towards happiness. Imagine waking up each morning feeling energized and optimistic, ready to tackle whatever the day may bring. Picture yourself navigating challenges with grace and resilience, knowing that you have the inner strength to overcome any obstacle. This is the power of positivity in action. When we approach life with a positive mindset, we open ourselves up to a world of possibilities. We're more likely to see opportunities, attract positive relationships, and achieve our goals. Happiness is not a guarantee of success, but it's a powerful catalyst for creating a more fulfilling and meaningful life. Happiness is within your reach. It's not about waiting for the perfect circumstances. It's about making the choice to cultivate joy in the present moment. Embrace the journey, practice these simple steps, and watch as your life transforms into a brighter, more fulfilling adventure. Remember, you deserve to be happy. You As parents, we want the absolute best for our children. We dream of them growing up healthy, happy, and successful. While we focus on their education and well-being, it's equally important to think about their financial future. It's never too early to start planning, and that includes considering something called juvenile life insurance. Now, you might be thinking, life insurance for my child. Isn't that a bit much? But trust me on this one. Juvenile life insurance isn't about expecting the worst. It's about being prepared for the unexpected and securing your child's financial well-being no matter what life throws their way. Think of it as a safety net, a way to provide for your child even if you're not there to do it personally. It's about giving them a solid financial foundation to build upon. In the following sections, we'll unpack the key benefits of juvenile life insurance and why it's a smart investment in your child's future. Because let's face it, as parents, we've moved mountains for our kids, and securing their financial future is one of the greatest gifts we can give them. Life is full of surprises, and not all of them are pleasant. In the unfortunate event of a child's passing, juvenile life insurance provides crucial financial support to the family during an already emotionally challenging time. Funeral expenses, medical bills, and other unexpected costs can add up quickly, putting a strain on any family's finances. Juvenile life insurance helps alleviate this burden by offering a death benefit that can be used to cover these expenses, allowing the family to grieve without the added stress of financial strain. This financial safety net ensures that the family can focus on healing and supporting one another during a difficult period. Moreover, the death benefit can be used for anything the family deems necessary, whether it's covering everyday living expenses, paying off debts, or investing in the future of surviving siblings. Having this financial cushion provides peace of mind, knowing that the family will be taken care of no matter what the future holds. It's about being prepared for the unexpected and ensuring that your family's financial well-being is protected, allowing them to navigate challenging times with greater resilience and support. One of the most significant advantages of juvenile life insurance is that it locks in insurability at a young age. As children grow older, their risk of developing health issues increases, which can make it more difficult and expensive to obtain life insurance later in life. By securing a policy when your child is young and healthy, you guarantee their access to affordable life insurance coverage regardless of any future health conditions they may develop. This is especially important for children who may be predisposed to certain health conditions due to family history. Juvenile life insurance ensures that they will have access to the financial protection and peace of mind that life insurance provides throughout their lives, regardless of their health status. This is a valuable gift that can save them money and potential headaches in the future. It's about being proactive and securing your child's financial well-being for the long haul, giving them the tools they need to navigate the uncertainties of life with confidence and security. Savings advantage. Investing in your child tomorrow, today. Many juvenile life insurance policies come with a built-in savings component, often referred to as cash value. This feature allows you to contribute more than just a premium payment, with the excess funds accumulating interest on a tax-deferred basis. Over time, this cash value grows and can be used for various purposes, such as supplementing your child's education expenses, providing a down payment on their first home, or even jump-starting their retirement savings. This savings component adds another layer of financial security to your child's future, allowing you to invest in their long-term goals while also providing life insurance coverage. It's like hitting two birds with one stone. You're protecting your child's financial future while also building a nest egg that they can access later in life. This dual benefit makes juvenile life insurance a wise investment for parents who want to maximize their financial planning efforts. It's a powerful tool that can help your child achieve their dreams and secure a brighter financial future. Secure their future. Give your kids the gift of financial security. In conclusion, juvenile life insurance is more than just an insurance policy. It's a comprehensive financial tool that offers numerous benefits for your child's future, from providing financial security during unforeseen circumstances to locking in insurability at a young age and even offering potential savings accumulation. Juvenile life insurance is an investment worth considering. As parents, we strive to provide our children with the best possible opportunities in life. Securing their financial future through juvenile life insurance is a powerful way to demonstrate our love and commitment to their well-being, both in the present and for years to come. Take the first step towards securing your child's financial future. Explore the options available and consider incorporating juvenile life insurance into your overall financial plan. Your children will thank you for it. Don't forget to share, like, and subscribe to this video. Share it with other parents, and subscribe to our channel for more insightful content on financial planning for your family. Did you know that many people haven't planned for what happens to their belongings after they're gone? It's like leaving on a trip without packing a bag. Planning for the unexpected is crucial, even if it's not always pleasant to think about. That's where a will comes in. A will is a legal document that lets you decide what happens to your money, property, and possessions after you die. It's your way of ensuring your loved ones are taken care of and your wishes are honored. Having a will provides peace of mind for you and your family. It prevents confusion and potential conflicts among family members who might have different ideas about your estate. Don't wait for a crisis. Take charge of your future today. A will is a legal document that outlines your wishes regarding your assets and dependents. Your assets include everything you own: your house, car, savings, investments, and personal belongings. Dependents are those who rely on you financially, like your children or other family members. In your will, you'll name an executor, a trusted person who will carry out your wishes as outlined in the document. You'll also designate guardians for your minor children, ensuring their well-being. Importantly, a will allows you to distribute your assets according to your wishes. You can leave specific gifts to loved ones, charities, or organizations you care about. Without a will, the laws of your state, intestacy laws, will determine how your assets are distributed, which may not align with your wishes. This can create complications and potential disputes among family members. Imagine this: a young couple with a child unexpectedly passes away. Without a will, their assets are tied up in court, leaving their child's future uncertain. A will would have ensured their child's financial security and well-being. Consider another scenario. A successful businesswoman built her company from scratch. Without a will, her business partners might face challenges and her hard work could be jeopardized. A will would have ensured a smooth transition and protected her business legacy. These are just two examples of why having a will is crucial. It provides clarity, prevents family disputes, and ensures your wishes are honored. Even if you're young and healthy, having a will is essential. Life is unpredictable, and planning for the unexpected is a sign of responsibility and love for your family. Please like and subscribe to this channel for more information like this. Creating a will might seem daunting, but it doesn't have to be. Many resources are available to help you through the process. You can start by consulting with an estate planning attorney. They can guide you through the legal requirements and help you create a will that meets your specific needs. Many online services also offer will templates and guidance, making the process more accessible and affordable. When creating your will, be sure to clearly identify yourself, your assets, and your beneficiaries. Name an executor you trust to carry out your wishes. Specify guardians for your minor children. Detail how you want your assets distributed. Sign and date your will in the presence of witnesses. Remember to review and update your will regularly, especially after major life events like marriage, divorce, or the birth of a child. Keeping your will current ensures your wishes are reflected accurately. Don't wait to create your will. It's a simple step that can have a significant positive impact on your loved ones' lives. Taking control of your future and ensuring your wishes are honored is a gift you give yourself and those you care about most. Remember, having a will isn't about fearing death. It's about embracing life and ensuring your legacy reflects your values and intentions. Start planning today and enjoy peace of mind, knowing you've taken care of what matters most. Have you ever wondered if life insurance is a good investment? Well, to answer that, we first need to grasp what life insurance is. At its core, life insurance is a contract, a deal, if you will, between an individual and an insurance company. The individual, that's you, agrees to pay a specific amount known as a premium on a regular basis, monthly or annually. Now, what does the insurance company do? They promise to provide a lump sum payment, often referred to as a death benefit, to your chosen beneficiaries upon your demise. It's not a topic we like to dwell on, but it's a crucial part of financial planning. The primary goal here is to offer financial protection, a safety net of sorts, to your loved ones after you're no longer around. So essentially, life insurance is all about providing financial protection to your loved ones after you're gone. Now that we know what life insurance is, let's examine the two primary types, term and permanent life insurance. First up, term life insurance. This is a bit like renting a house. You pay for coverage for a specific term, say 20 or 30 years. If you pass away within that term, your beneficiaries receive the death benefit. However, once the term ends, so does your coverage. On the other hand, permanent life insurance is like owning a house. You're covered for your entire life, not just a specific term. This type of insurance also includes a cash value component, which is a savings account that grows over time. So, not only are your loved ones protected, but you're also building a nest egg of sorts. These two types of life insurance, term and permanent, offer different benefits, so choosing between them depends on your personal needs. Now on to the big question, is life insurance a good investment? Well, certain types of life insurance, specifically permanent life insurance policies, can indeed function like investment vehicles. These policies build cash value over time, a sort of nest egg that you, the policyholder, can borrow against. This cash value growth is tax deferred, which means you won't pay taxes on it until you withdraw the money. Sounds good so far, right? But before we get too excited, let's add a bit of perspective. While this feature can be an attractive perk, it's vital to note that the returns on this kind of investment are usually lower than those you'd see from traditional investments like stocks or real estate. Yes, life insurance comes with its unique benefits, but it's not primarily designed to be an investment product. So while life insurance can act as an investment, it might not be the most lucrative one out there. So, should you consider life insurance as an investment? That's the million-dollar question, isn't it? Let's break it down. Life insurance at its core is meant to provide financial protection to your loved ones in case something happens to you. It's a safety net, a cushion, a peace of mind provider. It's not designed to be a high-yield investment vehicle. That's something you need to keep in mind. Now, this doesn't mean life insurance can't be a part of your investment portfolio. It can be, but it shouldn't be the only thing in there. It's a piece of the puzzle, not the whole picture. And remember, everyone's financial situation is unique. What works for your friend or neighbor might not work for you. So it's always a smart move to consult with a financial advisor. They can help you figure out the best investment strategies for your individual circumstances. In conclusion, life insurance can be a part of your financial strategy, but it shouldn't be your only investment. And there you have it, a simple breakdown of life insurance as an investment. Now, isn't that something to ponder on? But remember, this is just the tip of the iceberg. There's a whole world of financial wisdom out there awaiting your exploration. Take the reins and dive deeper. Consult with professionals, seek advice, and always make well-informed decisions. It's your money, your future, and you deserve the best. This journey of financial enlightenment doesn't have to be a solo trip. Let's embark on it together. We've got plenty more insights and nuggets of knowledge to share, so why not join us on this quest? Like our content? Then let's make it official. Hit that like button, share it with your friends and family, and don't forget to subscribe for more. Remember, knowledge is power. So keep learning, stay informed, and make smart decisions about your financial future. Please like and subscribe to this channel for more information like this.